Did a real quick trade this morning and just picked up 140 bucks. Let's jump into it. And I did this trade selling cash secured put options over STW. Now, unlike a stock, STW is actually an exchange traded fund that tracks the top 200 shares on the ASX. So in other words, rather than buying a single stock like I often do, BHP, PLS, Telstra, those sorts of things, STW essentially gives me a share in a basket of the ASX top 200 stocks, which to me, in a volatile market, seems like a safer alternative. Meaning, if I buy one stock and that one stock goes, I lose all my money. An ETF, like this one, isn't potentially going to be as volatile because it's made up of 200 stocks. So on STW, I sold some cash secured puts, which is a credit trade. Means I get paid straight away for selling the right for somebody to sell me their STW shares on or before a certain time and date for a certain agreed price, which we're going to look at. Now, while $140 is not a lot of money, it's not a big trade. To me, it's a very low risk trade. And you got to remember, most of my bigger trades started out as little trades like this one. If you remember PLS, I've done a few videos on that one. That started out as a cash secured put trade, where I first gave someone the right to sell me 30 PLS shares for $1.91. And I collected about $350 for that trade. I then sold another 20 options a few days later and collected another $162. A couple of months later, I was assigned those shares, which means I then owned the PLS shares. That was less than 12 months ago, and over that time, I've sold a lot more options over PLS. But the crazy thing is, I'm still holding the stock. I still own the PLS shares. At the moment, I've got 8,000 of them. I ended up owning PLS purely because I was assigned from the cash secured puts that I sold, just like I'm doing today. I ended up owning about 8,000 PLS shares at a cost of about $1.78 each. The last time I checked, I was up about 25,000 bucks just on that one stock. When you look at the chart of PLS, you can see I was assigned the shares around about February last year. That's when PLS was trading at about $1.76, $1.80, something like that. Well, today, PLS is trading at $4.26, and it's been as high as $5.32. In other words, $5.32 times 8,000 shares is about 42.5 grand. I paid $1.78.6 per share, which is a cost of about 14,280 bucks. So a couple of weeks ago, when PLS was trading at $5.32, I was sitting on about 42 grand, minus the 14,000 that it cost me. I was up close to 30 grand, just on this one stock. But also bear in mind, over the year that I've had these shares, I've written a lot of options, I've collected a lot of premium, and I've also collected dividends. But I've already talked a lot about that trade in other videos. The bottom line is, today's $140 is not a lot of money, but it may get me into another trade that becomes highly profitable. It could be my next PLS trade, or even my AMC trade that's up close to 6 grand, my BHP that's up about 4.5 grand, my Woodside that's up about 1,500 bucks, or my BlueScope Steel that's up about 1,800 bucks. In other words, getting into a trade, for me, selling cash secured put options is how I normally get myself into each trade. Let's have a look. I was having a look at STW this morning, about 10 o'clock, and it's come down a fair bit. The whole market's come down a fair bit with everything that's going on around in the world at the moment. My personal view, what I like about STW, and please remember, this is not investment advice, I'm not a financial advisor, I'm not a guru, I'm a private trader, I trade my own money, and I talk about it on my YouTube channel. What you do and what you do with your money, that's your business. Anybody who tells you what to do with your money, if they're not a licensed financial advisor, you should probably run. For me personally, in this current market, I want to own some STW ETFs. It's an exchange traded fund. As I said, this is not an individual stock. It's a share in a basket of the top 200 shares on the ASX. So in other words, it's less volatile than a single stock, which to me helps me to sleep at night. So the last traded price today, or when I was looking at them this morning, was about $75.88. Now I'm thinking I'll buy a couple hundred of them. $75.88 times 200, that's about 15,000 bucks. 15,176 to be exact, plus brokerage and costs obviously. Now I could quickly shell out 15 grand, go to the market and say, hey, here's my 15 grand, please give me 200 STW shares. Fine. But what I did instead, as I've done with PLS and BHP and Woodside and other shares that I own, I instead look at the derivatives, and rather than saying sell me 200 shares, I sell the right to somebody else to sell me their shares on or before a certain date. Today's the 23rd of March, 2026. So I look at the STW option chain and I'm looking at the put options, not the call options. Call options give me the right to sell my shares to somebody else. I don't own any STW shares at this point in time. Put options gives me the obligation to buy somebody else's STW shares on or before a certain time and date, if they choose to exercise that right. Meaning, I look at the option chain and I see STW is currently trading at $75.89. So I then say, okay, well, if any time between now and the 16th of April, you want to sell me your STW shares for $73, you can do that. But I want you to pay me some money now for that privilege. Is somebody going to sell STW to me for $73 between now and the 16th of April? Well, given that it's currently trading at $75.88, so almost $76, no, they're not going to sell them to me for $73. And in actual fact, when you look at the chart, the last time STW was trading at $73 was probably around here somewhere, between April and May of last year. So literally, other than this big drop in price here, where STW fell down to about $64 or so, you can see here the 52-week low, $64.59. Generally, STW's been trading somewhere around $78 to $80. So the likelihood of someone selling STW to me for $73 is potentially quite slim at the moment. But we don't know what's going to happen tomorrow. We don't know what's going to happen next week. This is why someone's prepared to give me money to lock in some insurance with me, which is essentially the same as insuring your car or something. If I've got a $30,000 car, I call up an insurance company and say, hey, I hope nothing happens to my car, but if it does, will you give me my $30,000? And for that privilege, I'll pay you $500 a year or whatever. This is a similar concept. Somebody's going to come to me and say, look, I hope I don't have to sell my STW for $73. I'd rather sell them for $80, $90, $100. But if something goes wrong, I want to know that I'm going to lock in some kind of insurance that I can sell STW for $73. And for that right, I'll give you $100 or whatever it is. So that's what I did. I sold the $73 put option. That expires on the 16th of April. Meaning, if on the 17th of April, STW's trading at $70, too late. This person only has between now and the 16th of April to sell STW to me for $73. So I jumped over to the order screen and I said I want to sell to open 2 contracts because each contract is for 100 STW shares. And remember, I want 200 shares for about 15 grand. So I am saying you can sell me 2 contracts, 2 100s, so 200 STW shares on or before the 16th of April this year for an exercise price of $73, meaning I will give you $73 per STW share, and I'm going to commit to 200 of them. But for that right, somebody's saying, yeah, I'll sell those for $1.04. That's the offer. The bid is 77 cents. Again, to use the car insurance analogy, that'd be like me saying, hey, I've got a $30,000 car, I want to insure it for $30,000 and I'm prepared to pay $400 a year. But the insurance company's saying, sure, we'll insure your car for 30 grand, but we want $600 a year. Now, we have to somehow meet in the middle. The insurance company wants 600, I only want to spend 400. That's what's going on here. Someone only wants to spend 77 cents, but they want to sell it for $1.04.5. So I'm coming in the middle here by saying, look, I'm not going to pay you $1.04.5, but I'm also going to be a little bit more generous than the other person who's offering 77 cents, and I'm going to come in at 88 cents. So that's my offer. So I've now come in and said, sell 2 contracts for 200 STW shares that I will buy for $73 per share times 200, and I will commit to this trade that you can sell your shares to me between now and the 16th of April, and for that I want 88 cents per share. So 88 cents times 200, $176. If it wasn't for brokerage and costs, that's exactly how much money I'd get. But the broker, in my case CommSec, they want $34.95, and the exchange traded option contract fee is 46.2 cents. So after brokerage and costs, my $176 ends up being $140.58. So I place the order, I hit proceed, it gives me a confirmation. You sure you want to do the trade? Yes. The trade gets submitted, it goes through into the market, says the order is processing, and this is at 1:28, which is Eastern Standard Time, so that's 10:28 AM here in Western Australia. So 10:28 this morning, I put this order through, it went into the market. What that means is the order hasn't been fulfilled, hasn't been executed, it's now sitting in the market. So like this one here that was offering 77 cents, my order's now jumped above his, and I'm sitting here at 88 cents. So if you actually looked at the market, instead of this being 77 cents, it would now say 88 cents. And I'm waiting for my order to get taken. Basically the offer here at $1.04.5. Hopefully he'll see this new offer at 88 cents and he'll be like, yeah, okay, I'll take that, which is why it's sitting in the market at 1:28 or 10:28 AM. 10:46 AM, which is 18 minutes later, I get a notification email telling me that the order's been executed, which means CommSec have done the order, it's met the market price, I've been paid the 88 cents that I asked for, times 200, which is my $176. That's the $35 of brokerage and costs, $140 cash, $140.59. Settlement date, 24th of March. Today's the 23rd of March, so what that means is this cash will be in my account tomorrow. So quick look at the numbers. What is my risk on this trade? The most I stand to risk on this trade, take away brokerage and everything like that, let's just talk round numbers, is I'm saying I will buy 200 STW shares for $73 each. So that is $73 times 200, $14,600. That's how much I stand to risk on the trade. But don't forget, I've just been given $140, so I can deduct that from my total cost as well. So $14,600 becomes $14,460. That's how much this trade's going to cost me out of my own pocket, not taking into account brokerage and other costs. Divide that by my 200 shares. That means each share's costing me, rather than $73, $72.30. So remember when I said, this morning I was looking at STW and I thought, yeah, I'd like a couple of hundred of those. It's going to cost me about 15 grand. Well, that's if I bought them for $75.88. But now, doing it this way, it's going to work out that if I do end up owning them, they haven't cost me $75.88. They've cost me $72.30, which I'm a lot happier with. So this $140, while it doesn't seem like a lot of money, it's close to 1%. Think about it. You take $15,000, 1% is $150. But I'm not spending $15,000. I'm spending $14,600. I've just been given $140. So 140 divided by 14,600 is 0.95 blah 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 percent. In other words, I'm risking 15 grand or close to it, 14.5 grand. $140 is close to 1% of that. Now, while it might not seem like a lot of money, for me, this is how I prefer to buy my shares, as you've seen with PLS and other shares, where I, rather than just go out and buy the shares, not always, but in a lot of cases, I'll write cash secured puts. I'll get the money up front, which is a percentage of the total cost. It reduces my risk. It reduces my cost basis to get into the share. Now, in some cases, like PLS, BHP, Woodside, and some other shares that I've been assigned, it started out the exact same way. I sold some cash secured puts. I was assigned the shares, which means, like in this case, if STW falls in price and I get assigned, I get to buy the shares for $73 each. Once I own the shares, I then write call options over the shares, or I write additional put options to buy more by dollar cost averaging as the share price is going down further. I often roll the options contracts, which you've probably seen in some of my other videos that I've done. I collect the dividends, or in the STW case, the distribution payments. STW pays 4 of those a year. But if I'm not assigned the shares, then essentially I'm making 1% return on options that are going to expire 1 month from now. In fact, less than a month. 16th of April. Today's the 23rd of March. So it's literally 3 and a bit weeks. And obviously if you did that every month, you made 1%. Well, that's 12% a year. 12% a year is a lot better than leaving your money in the bank at 4.8% or whatever it is that you can negotiate. Now again, I'm not a financial advisor and I'm not telling you what to do with your money. I'm telling you what I'm doing with my money and what's working for me. Let me know in the comments if you found the video useful and you want me to make some more. If you've made it this far into the video, I would like to say this is the first video I've created in a few months. I enjoy making them, but I just get slack. And I've said in other videos too, you might have seen this. I'm in the middle of renovating another house that I've got, and it's about an hour's drive from here. I've had this place for a couple of years now, so I've been pretty busy. And in actual fact, I'm renovating the house that I live in as well. So literally I'm renovating 2 houses. So I've been really busy. But I've also been getting a lot of awesome comments on the channel. It's a fairly new channel. Only got a handful of subscribers, less than 100 at this time. Been getting a lot of really good feedback. I can see that you guys are getting a fair bit out of these videos. So if you want me to keep making them, let me know, and I'm happy to do so. Thanks for watching.